All right. Good afternoon, everyone. I'm here with Sam Rines, the Managing Director of CORBU, and he's going to talk to us a little bit about energy and oil prices. Sam, why have oil prices gone up, but the U.S. production of oil has not?
So it's a two-part problem. One, it's a problem of not really having the capacity to do so right now. There's several reasons. One would be it's difficult to find concrete, it's difficult to find piping, it's difficult to find labor in the oil patch. And when you can find the labor in the oil patch, it's very expensive. So that's kind of the first limiting factor. The second limiting factor is that during the previous oil boom, shale boom, in the earlier 2010s, we had a lot of companies just wasting money. Instead of putting it back to shareholders, they put more in the ground, they pumped more oil, and the price of oil collapsed. And shareholders were out of luck for a very long time. And so we begged for capital to be returned to shareholders when it could be, and try to keep the capital expenditures down. That created a scenario where oil at $100 doesn't really matter for the vast majority of U.S. producers. They're going to drill less, and they're going to return that capital to shareholders in dividends and stock buybacks. So it's kind of you get what you ask for, and sometimes that has consequences.
I see. And so what do you think the sanctions really mean for Russian energy?
Oh, this is one of the most understated parts of the war in Ukraine and its longer-term consequences. Sanctions go on very quickly. They come off very slowly, if ever. Look at Iran, look at Venezuela. These are things that I think is kind of being forgotten. It's not like if the war in Ukraine ends in mid to late September, we're suddenly going to have energy prices and enough energy to actually get energy prices down on a sustainable basis. Maybe it'll be a knee-jerk reaction lower, but it's a much longer-term scenario because U.S. service companies aren't there, European services companies aren't there. That means the wells that they have are going to decline. They're not going to be able to drill with the expertise that we have in the West, and they're not going to be able to service the fields with the skills we have. If you look at Venezuela, I think it's a really interesting longer-term kind of way to think about what could happen to Russia. Right? Russia and China's service companies have been in Venezuela for a long time. They have not been successful at keeping that Venezuelan oil flowing, and that's not going to change. So I think if you want to understand the longer-term consequences, it's an impairment of the Russian energy state as it is.
That's really interesting. And do you think, will we get back to the old normal?
No, because it's interesting. The old normal was based, and call it the old normal from the collapse in 2014-15 of oil prices, when we kind of got used to this idea that maybe oil is never going to go up again, maybe it's never going to be high again. That was a very unique scenario where you had U.S. shale that was still drilling, you still had Saudi Arabia, Russia, etc., really pumping oil at almost max capacity. You simply don't have that now, and you have a complete disjointing of the global energy market that's going to be very difficult to repair, and it's going to take time to reconfigure those lanes of traffic for energy, particularly for Europe, but even for places like India and China.
Amazing. So we are speaking with Sam Rines, Managing Director of CORBU. What does CORBU do?
CORBU is a research and intelligence firm that sits at the nexus of geopolitics, national security, and markets.
Wow. Well, thank you so much for joining us for Camp Kotok Week 2, and we'll talk to you again soon.
Hey, thanks for having me.
Thank you.